Hello everyone, welcome back to deriv killer strategies. So we have released numerous strategies in the past, our BKS robot and our millionaire robot. So far so good, has been giving a lot of guys lots of profits. So a lot of guys have been using it to grow their account to $1,000, $2,000. So with a minimum of $5 you can trade the robot. Even with $4 equity you can trade the robot. So we are very happy, we are getting good and positive feedback. So we just want to throw more light on our strategies we have released. So our 3-in-1 strategy, will be dealing on that today, how to trade it on ICT concept, order blocks. So one thing you need to understand is, once you understand the concept of trading, you will not have any issues. So just want to show you how to use your concept, then you apply the strategy and you make massive profit from the market. Because one thing you should understand now is that deriv is making the market more volatile and more difficult. They are taking out liquidity every day. So you need to be on top of your game. So we'll be throwing light into that today. So one thing you need to understand is, what is order blocks? Order block is the last opposite candle before a massive move to the upside or to the downside. So let me just show you something. So order block is let's assume that we are on the downtrend. Actually the market was actually dropping like this. Then it got to a point the market made this move. The market broke the structure, and started coming down. But there will be a time when all this move to the downside. A candle will come that will come here. The next thing is something like this. So the last opposite candle, that is the last opposite candle, the bearish candle before the bullish candle that made this move. The bearish candle is our order block, and this whole point is called our point of interest. This whole point is our point of interest. We call it PI, point of interest. So this is our demand zone. It's called our point of interest. So in the future, market will come back to that point to test that candle, that order block on our point of interest. Then the market will move up. So that's just what you need to know. That's what you need to do. The same thing applies here. There might be an order block sitting right above here. There might be an order block sitting right above here. So another block might just be sitting here. That other block is what made this market to come down, to drop to this downside. So the last opposite bullish candle here that made about this long drop to the downside is our order block, and this whole supply zone here is our point of interest, PI. Is our point of interest, PI. So along the way you'll notice something, that the market, I'm just setting an example, as it's dropping, it will be making a series of lower high, lower low, lower high, lower low, lower high, lower low. So all these are called step OBs. The market will just mitigate this place and drop. Even on the lower time frame, mitigate this place and drop. The market will come back, mitigate somewhere here and drop. Mitigate somewhere. Sorry, my chart is a little bit messy, and drop. We'll go to the live chart. The market will go and mitigate somewhere and drop. So all these places that the market is coming to mitigate, drop, mitigate, drop, mitigate, drop, or in the layman's terms, or in trading terminology, you can call it to retest, or in ICT we call it mitigate. So the market will come back and retest and drop, retest and drop. So all these places are called step OBs. Step. They're called step OBs. Step OBs. They're called step OBs. So they're called step OBs. Let's go back to. So we said that liquidity is stop hunt. So once the market takes you out, let me assume now in this scenario now some persons now will be buying here when this market is actually coming down. So the market will just trick you. Let me clear this so that you can see my chart properly. Just give me a second. Let me clear it. Okay, let's say the market was doing something like this, doing something like this, doing something like this, doing something like this. The market was just taking out structures taken out, structures taken out. The market was making a series of lower low, structures taken out. So most time the market will come here for those retail traders who trade double bottom and double top. Market will come here to do like he wants to actually buy. Boom, the market will go down. So most time the market will go and mitigate on a step OB, which is going to actually push it down. So the market is actually coming back to the order block, to our PI, our point of interest, like you already know. So this market now, from this market now to sell this sell, it needs to buy. For this market to sell this sell, it actually needs to buy, to trick people into believing that the market is actually buying. So immediately you buy, the market will fall, and the market will fall to sell. So what deriv actually does is they use the stop loss of individuals to pay people. So like if you're in this market right now, let me assume that you want to buy, or probably you want to sell. You enter this market at a very wrong point here. You understand? There's a probability that this market might actually get to this point, take you out, then take out your stop loss, then the market will boom come down. The market will come down. So that's what deriv actually does. So it's not only deriv, most brokers, that's what they do. So they always go for stop hunts. So once they have taken out all the stop loss, it is called liquidity. Once they have taken out all the liquidity in the market, then they can actually move the market. So for this market to keep selling to this point, they need to be taking out people that want to buy, or people that enter the sell at the wrong point. So I'm going to be teaching you all this. I'm going to be teaching you all this and all. This video is going to be a little bit lengthy. So just sit tight and understand the concept I'm giving you. So with the 3-in-1 strategy is going to be very easy, but you just need to get this concept so that you understand what you are doing. So you not just go blindly into the market. You understand? You not just go blindly into the market. So we will be getting good response from our students, but we should just teach you the ICT aspect, so that once you understand this concept, if you are using the 3-in-1 strategy, it's just going to be very easy. So you just use the 3-in-1 strategies for extra confirmation to make extra profit. So let's talk about the next on our. Let's talk about the next here. So we've talked about step OBs. It says step OBs are little OBs the market makes while going up or going down. So where the market goes back to retest or mitigate and drops or continue the upward momentum is what is called step OB. We said the liquidity is stop loss hunt. So your broker must take out retail buyers or sellers before moving the market up or to the downside. We talked about that. For the market to move to the upside or to the downside, they have to take out liquidity. So let's talk about some common chart patterns. We have a draw based drop, rally based rally, rally based drop, and drop based rally. So these chart patterns, you always see it on the market. You always see it on the market. So we'll be spotting this while trading. We'll be spotting, even on lower time frame, we'll be spotting this while trading. So let's go to our chart. Okay, let me just show you what this actually entails. Let me just show you something. So for drop based drop, we should have something like the market will drop, and when the market drop, the market will take out structure. Let me assume the structure was somewhere here. Structure was somewhere here. The market will take out the structure. Then the market will base. The market will go back to mitigate a supply zone or our order block or something. Then the market will drop. So always look for these patterns. Always look for this pattern. Then the market will drop. Then the market will go back again. Drop. The market will still go back again to find our order block. Drop. So this is the case of drop based drop. I'll be talking about drop based drop and rally based rally. Then in the case of rally based rally, this drop based drop is just for the downtrend. This drop based drop is for the downtrend. Then let's talk about the rally based rally. Then in the scenario of rally based rally, the market is actually on an uptrend. The market will rally up, rallying up, and there will be structure somewhere here. Then the market will break that structure. Then the market will come back to that base, and this base is our demand zone. Then the market will rally back up, taking out the structure. At the point we go that the market will come back again to our base, yeah. So the market will rally back up. So if you understand, this is rally based rally, this is drop based drop. So we have drop based rally, but I don't want this video to be too lengthy. It's already too lengthy as it is. So this is just it. So let's go to our chart and see how we can apply this to our charts. So let's go to our chart. Let me pick something. Okay, this is boom 1000. This is boom 1000. This is boom 1000. So this is boom 1000. So first and foremost, we will go to our let's go to our time frame. We're on our 4 hours time frame. This is our 4 hours time frame. So let's check what this market is actually doing. So for one, you can see is that this market is actually bearish. It's actually bullish. This market is actually bullish. Market is actually bullish. You can see. So let's see something like this. The market, this was our structure. This was our structure. The market took it out. Like I told you, this market made a series of. We'll go back to our lower time for the rally. The market came back to the base. Then you can see the market rally back up. So you can see at this point in time, this market was actually selling. You can see it was actually selling, but it got to this. This is our order block. Let's go to our 6 hours and see something. This is our order block, because we talked about order block. So the last opposite candle before a massive move to the upside. This is our order block. 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 But already now it has been mitigated. So once another block has been, you can see the market, it came back. It came back to rally base rally. The market came back to test our order block or our demand zone or our support, anyone you want to call it. So that's just it. So all you need to do now is to go to your lower time frame, since you know that this market now is on an uptrend. You understand? You can see that at a point in time the market came back The market rallied back up. The market came back to that our order block because the first order block has been tested. So this is now the new order block, because this one has actually been tested. So one thing you need to notice is that along the way now, this market was making a series of step OBs. So you now, since you know that this market is coming back to test our main order block, our bearish OB, or our point of interest, we already have it, and luckily our Cravers has already drawn everything for you up there. The Cravers has already drawn everything for you, that there's an order block, there's a point of interest sitting right above on the 4 hours. Always use the higher time frame, then you can go to your lower time frame and see exactly what you are doing. This will help you to hold long trades. This will help you to catch a very high risk to reward ratio. So let's go to our 1 hour and see something, and see our step OBs. Okay, so you can see this structure has been taken out. So the market just came back. When the market came back, you can see something like this. By here, our Cravers would have shown that there's a zone here. So all you need to do now is to wait for the rollers to give you a confirmation. Yeah, you can enter. Immediately it passes it gets across our trend detector. This is our trend detector. You can see our trend detector here. This is our trend detector. It has passed it, and the rollers are giving you a confirmation to buy. You can easily enter this buy, and you will be on this market for a very long period of time. Okay, let's say you didn't catch it here. Let's say you didn't see it here. You wait for this structure. You just draw a structure. How do you know your structure? You look at the nearest high or the nearest low. So currently now, this is the nearest. This is the nearest high, because this is the nearest high. Let's look at the nearest high here. This is the nearest high, because the market will be making step OBs along the way. Step OBs. Look at it here. Step OBs along the way. You can still draw your trend line to confirm this. You can see your trend line. Sorry, my chart is going to be a little bit messy. Let me show you something. You can see a trend line, but trend line is not really what we use here. So you can see now the market now took out this structure. So I told you about step OBs. So the market is coming back here. So you can go to 15 minutes. Let's see 15 minutes here. I'm coming. Let me show you guys something. Let's go to 15 minutes. I will show you how to catch sniper entries. Show you how to catch sniper entry. Show you how to catch sniper entries. Show you how to catch sniper entries. Okay, let's look at that point on the 1 hour time frame. Okay. Sit on the 1 hour time frame. Okay, you can see this structure was actually broken, so the market just came back to our step OB. And one good thing is that the Cravers would have drawn this demand zone for you, so you just need to come here and wait for the rollers to give you a confirmation, then you can enter. You just need to come back and wait for the rollers to give you a confirmation, then you can enter. Okay, let's go back to our 1 hour and see something. Let's go back to our 1 hour. So let's assume that I wanted to enter this market again. We'll wait for this structure. Wait for this structure to actually be taken out. Wait for this structure to actually be taken out. When this structure is taken out, you find out that it came back. Yeah. You can see step OBs. I was telling you about step OBs. This is 1000. This is 1000. So you go. The Cravers would have drawn that already for you, so you can see. You can see how it just went, came back here. They wait for the rollers to give you a confirmation, then you enter. You should not be selling, but this market is very, very, very bullish. You should not be selling. You should not be selling in this market. If you want to do the 20-minute session, I will show you how you're going to do it. You should not be selling in this market. You should not be selling. You should be catching this spike. So it's very easy. Okay, you can see now, we know that already our crevice has shown us on the 4 hours time frame where our point of interest, our PI, our point of interest, POI, where our point of interest is. So our POI is somewhere here. So on our 4 hours, you can see that this is our POI, point of interest. So we know that that's where we are targeting our take profit. So we can come back here and wait for another break of structure. You can see the market broke structure again, it came back. So you can still decide to still come here, hoping to get to your POI, your point of interest. So the market clearly structure, you can see that you can enter here. Already the crevice will be showing you this. So for you to enter, you can just go to your 15 minutes so you can catch a sniper entry. So you can catch a sniper entry. You can enter from here. You can enter from here. You can see it here. You can just keep your stop loss just below here. Just keep your stop loss below here. So the rollers will give you a confirmation. Look at where the rollers give you a confirmation. It went here. So you can set your take profit to be the nearest high, or you can just leave it, at least your stop loss is just under. So let's go to our 1 hour and see more. So you can see where the market actually got to our POI on the 4 hours time frame. That's when the market started coming down. So how do we sell this market? But as it is right now, we already know that yes, for sure the market has reversed. It has got to our 4 hours, and for what you can see, it will start selling. It will start selling. Actually, it will start selling. So for you to sell this market, all you need to do is just to come here on your 4 hours and wait for this last structure. In your 4 hours, wait for this last structure. This is the last structure that took you up. This was the last lower high the market made. Last lower high where the market made a new higher high. You understand? So this was the last. So you wait for this structure to be taken out. Already the crevice, this is our demand zone. The crevice will be showing you, or our step OB. The crevice will be showing you here that this is our step OB, because the crevice draws the step OB for you. You don't need to be drawing all this I'm drawing. Why I'm drawing is because it has, you know that with time the crevice goes off. With time it goes off, it clears the chart so that your chart is going to be clean. So that's just what happens. So that's why I'm drawing all this. The crevice draws all this for you. You don't need to be drawing. All you just need to know is just to wait for a break of structure. Just draw the structure to be taken out. Immediately you know that this is on an uptrend or on a serious downtrend. So this was the last lower high that the market made before the market made a new higher high. So the crevice will already be here waiting for you. You just need to wait for this place to be taken out. This place has to be taken out because this was the last zone that the crevice made before it made this new higher high. Just wait for it to be taken out. Immediately wait for it to be taken out. You can see it has been taken out already here. And it has actually been taken out already here. Look at it here, it's already out. So all you need to do is just to wait for a confirmation from the rollers and from trend detector. So this was when it gave us a clear confirmation. Before it gave us a clear confirmation that we can enter, but we have to wait for a break of structure because the market has to take out liquidity. The market has to take out liquidity because there are some persons around here that wanted to buy. They were hoping that okay, this market gets here, it will continue on an uptrend. But you already know that this place, this demand zone has actually be taken out. The market is actually coming down. So don't worry, I'll be going to be releasing more videos on this so that you understand what the concept actually is. So the market has actually been taken out here. You can see the market has actually been the structure has actually been taken out. So you just wait for it to look at it. Made a rally base. The market could not make a new rally. The market dropped. So actually what the market is doing now is just to form a drop base drop. So you can see drop base drop. You can see it. The market dropped, formed the base and dropped. So you can see it here. So you need to just go to your lower time frame. Go to your lower time frame. Let's go to our lower time frame and see. This is our lower time frame. You can see. So you just need to wait for structures to be taken. I can see here the market has taken out the structure. Let me show you something. The market has actually taken out the structure. You can see the structure has actually been taken out. That's why the market actually went back to mitigate this our OB. This is our step OB here. So don't worry, the crevice will draw this for you. I'm not showing the concept so that you understand what the concept actually is. All this, the crevice will actually draw this for you, so you don't have a problem. You understand? So for you to enter this market here, you can just enter from here, depending on when you get a confirmation from the rollers to enter. That's when you can enter. So that's how you can sell this market till you get to your, like I told you, till you get to your point of interest. This is how we get to our point of interest. I will know that already this market is already bullish. It's on a bullish run. We know that already. So even if we are selling, we're not just selling like a novice. We are selling to our POI, to our point of interest or our demand zone. But if you can still wait, you can still wait for, this is the 4 hours time frame, you can still wait for the buy. Because the market just broke this our structure. You can see, let me show you something. The market just took out this structure. Look at the structure here. Market just took out this structure. You can see it, took out the structure. So instantly the market started coming back down. Market took out the market started coming back down. Because it's taking out the structure, taking out liquidity. Because there were a lot of guys that were thinking that they were going to sell here. The market took out the structure and the market was just coming back to our point of interest to mitigate our order block and move up. You understand? But you can still sell from this point. You can see 4 hours here, the rollers on the 4 hours. Always work with your higher time frame. The rollers are actually showing you a confirmation to sell. So you can still sell this, and this is like almost 4 days sell, 3 days sell rather, 3 days sell. So you can still sell back into your demand zone. You understand? Before the market moves up. So actually when the market wants to move, you can see the buy here on the 4 hours. This is when the rollers is not telling you that this market now is actually on a buy. It's actually on a bullish run. You understand? So you just need to understand the concept. You just need to understand the concept. And if you see that point that the rollers gave you a confirmation to buy, you can see that then our trend signal, let me show you. You can see our trend signal is showing you us here that we are now on a bullish run. You can see our trend detector has actually crossed. This is our trend detector has actually crossed. Our rollers has actually showed us. So now you can just be using the step OBs. You can see break of structure, market come back, rally, base, rally. You can see rally, base. This is the base. Rally, base. Let me show you. Rally, base. This is the base. Rally, base, rally. Market came back to the base. Rally, base, rally. You can see the market came back to the base. So this is very important to understand this concept. Market came back to the base, and that base now is our step OB. You can see the crevice is actually drawing it for you. You understand? So it can just be going, it can just continue like that. You can be keeping your stop loss under, and you catch good risk to reward ratio. So it's as easy as that. It's not difficult. Time is not on my side. I would have shown you. Let me just show you step index. I'll be very fast. Let me just show you V75 rather. Let me just show you V75. I'll be very fast. So this is V75. So you can see we're on a very good bearish trend. You can see the rollers showed us, and you can see our trend. You can see our trend detector. You can see everything is showing you here. A lot of persons don't know how to use this. They just go about it blindly. You can see this is a point that you are going to actually sell. So let's go to our 1 hour and see the last lower high that the market made before we got to that point. Let's see something. So you can see at a point in time, this market was making a series of rally, base, rally, base, rally, base. You can see how the market was just coming back to our base, rally, base, rally, base. You can see very clean, and the rollers and everything were just supporting it. Imagine you enter this market from here. Look at where you would have gotten to. Very easy. So at the point in time, this market now, this was our rally, base, rally. This point was actually taken out, because this was what made a new high. So it was disintegrated. And started coming down. You understand? So at this point in time now, you should know that you are on a bearish momentum, because the market has actually gone to hit our 4 hours point of interest on the 4 hours. So you have already, the cravers would have shown you that that's our point of interest, our POI on the 4 hours, our order block on the 4 hours. So you should just know that the market has actually reversed. So what we're waiting for now, the good thing about all this is that the cravers and the rollers, they will all show you that the market has actually turned. This is it. The market has actually turned. You can see the confirmation here. So you need to do just to go to your 15 minutes and be waiting to catch your entries. Let me show you something. So you will just be going there and be waiting for you to catch your entry, because you understand the concept. Let's get to that point. You just be waiting to catch your concept. So you can see at the point that the market will take our structure, the market will go back to mitigate. All you need to do is just to wait for the other block. You just wait for the step OB and to drop. You wait for the step OB to drop. Let us look at this new buy, now that on top. So on our 4 hours, you can see that the market came here, mitigated this our step OB, and came back here. The rollers has already given us a confirmation that we should enter a buy here, but we're not entering like that. Let's get to our 1 hour and confirm that. On the 1 hour now, you can see it has crossed. So let's just go to our 15 minutes and see what we're actually doing. So you can see on the 15 minutes, you can see rally, base, rally. You can enter here. If you miss that, you can enter rally, base, rally, rally, base, rally, rally, base, rally. You can even still use the 5 minutes. You can still go down to the 5 minutes. You can see it. So guys, that is it for today. So the main aim of this video is just to throw light so you understand the concept. So deriv always take out liquidity. They take out stop loss before they are able to move the market. So most times they must take you out in order to move the market. Like in this scenario, you can see now that the market was kind of ranging. So they had to range this market for some time. And for those who are thinking that this was a sell, they had to range it. For those who are thinking that it was a buy, so they have taken enough liquidity to move this market to the upside. So thank you. We'll be releasing more videos like this for you. So thank you for staying up with us, and have a lovely day. Thank you.